Let me guess. You found a house on Zillow, on the internet somewhere. You're already naming your future dog, and you're wondering if the bank's going to let you live your dream out. Well, hold up, house hunter. Before you go furniture shopping, let's talk about mortgage pre-approval. What is it? Why do you need it? And how do you get one without losing your mind? Let's make pre-approval make sense. Welcome to the channel. What is a pre-approval? It's the lender's way of saying, yeah, we'll probably lend you money. Probably. It's stronger than a pre-qualification, which is just like a flirty guess. It shows sellers and agents that you're serious, not just browsing for fun. Bottom line, no pre-approval, you're shopping without a budget. You're at the grocery store and you left your wallet at home. So here's what you'll need. Start gathering your adulting paperwork, proof of income, pay stubs, W-2 tax returns if you're self-employed, whatever you need. Proof of your assets, which may include your bank statements, investment information, sneaker collection. I don't know if that's going to work I don't know how that works. I'm not a sneaker person. And they're going to do a credit check. Yes, they'll peek and take a look, and hopefully they'll see a 620 or above, but there are programs that allow you to be a little lower. Employment verification, they'll want to know that you have a steady income, not just a bunch of lottery tickets. ID and social security info, because, well, you have to be who you are to get approved. They're just not going to approve some random person. So you want to create a folder or somewhere where you can just dump all this stuff into it and name it whatever you want to. A dream home or a project home, something. Now, there are no secrets here. The lenders are going to look at everything. They're going to go through your whole financial history and other history. You're just going to be like an open book to them. Your credit score is going to be a necessity. The higher your score, the lower your rates can be. And a little tricky something they're going to look at, you may not be familiar with, is your debt to income ratio, DTI. The lower, the better. Aim to be under 43%. That means we take all your debts, minimum credit card payments, all that stuff, add it up. They're going to divide it by your income. And hopefully you come out lower than 20%. But once you get over 43%, they're not going to let you add a mortgage payment to all of that. They're going to look at your income consistency. 2 years of stable income is kind of what they're looking for, if not better. Assets that you have for down payment. Do you have any money left over after the down payment? Because you're going to need closing costs. Because we don't know if the seller is going to give you any closing costs. Your employment history. Yeah, you've been working consistently for 2 years, but were you a bus driver, then a warehouse worker, then a retail clerk in those 3 years? You got to be consistent inside of the same industry as well. Yeah, I know people say, I've been working. Yeah, but they're looking for consistency, not only of employment, but in your vocation. The goal is that you're trying to convince the lender that you're responsible and you can handle a monthly mortgage like a champ. You want to look real good. And once you approve, you receive a pre-approval letter that will tell everybody, like the seller of a home, how much the lender is willing to loan to you, your estimated interest rate, what type of mortgage you're going to have, FHA, conventional, USDA, VA, etc., and how long that letter is good for. It's going to have an expiration date. Because you would not believe how many people get a pre-approval, then go out and buy a Corvette. It changes your whole profile. It's basically your house hunting permission slip, and sellers love to see it. You come in there, you don't have no money, they don't want to talk. They just don't. Yeah, listen, but they don't want to see you unless you get a pre-approval. So you're not supposed to treat it like the golden ticket, like you're on Willy Wonka, but it definitely shows off very well when you put the offer in. Now, you approve, you get your letter. You don't want to celebrate by wrecking your finances. Going back to that Corvette you were thinking about, you want to avoid these things. Don't open new credit cards. No. I don't care what Victoria's Secret is doing for 10% off of your, don't buy another car. That Corvette, leave it there, wait till after close and do what you want to do. Don't quit your job. Don't quit your job. And I hate to say this, you don't really want to change jobs. Now, if you're going from teaching over here to teaching over there, that's probably okay. But if you're going from being a teacher into running a nightclub, even though it paid you twice as much, that's probably gonna hang you up. Okay, you don't want to do that. Don't blow your savings that you have in your bank. Wait until it's time to do the toast, or wait till we close. Just leave, leave your savings where they are. Remember, the lender is going to go back and check everything, not once, not twice, multiple times before closing. Once you go under contract and it's 3 weeks or 4 weeks or 2 weeks to close, they're going to review your credit profile several times before they give you a final closing thumbs up. Now that we got that out of the way, here's what we're going to do now that we got that pre-approval. You want to partner with a great agent. Probably should have done that from the beginning, but give me a call if you're in South Metro Atlanta. Then you want to start shopping for those homes based on everything in that letter. You got your criteria for a home. Now the bank is giving you their criteria for your home. So move fast. The pre-approval, 60, 90-day approval only lasts for so long. And now you're not just browsing. You are a serious buyer with leverage. And you want to keep the lender in the loop. That's my job. I will keep the lender in the loop, put in a doggone offer, or if we need to make changes, I need to lower that credit, that letter amount, or increase it, we'll go back, and we will always keep the lender in the loop. So, all right, future homeowners, you just graduated from what is the pre-approval? A crash course, we'll say that. Now you know why it matters, why you need it, and how not to ruin it once you've got it. I hope this video helped. Please hit the like button, subscribe to the Freddie Metro channel. Thank you very much for listening and supporting the channel. I'd love to hear from you. Leave a comment or send an email to me. Or if you need my undivided attention, feel free to schedule a Zoom appointment with me. My contact information is in the video description. And until next time, this video is closed, and have a great day.